But how many people do you think will be facing mortgage stress?
45% of homeowners are under mortgage stress.
Mortgage stress. Mortgage stress.
Mortgage stress.
Mortgage stress.
One of the buzzwords going around in the news at the moment is mortgage stress. But what is mortgage stress? Are you at risk? And what should we do about it? How should we prepare for it? I've been working as a financial planner for over 10 years, and when the financial landscape starts changing, such as now, I've noticed that people can get overwhelmed with what to do. So for years, when rates have been low, we haven't had to think much about our mortgage repayments because costs generally have always gone down. But now that rates are going up, the general mindset is changing amongst mortgagees. So in this video, I wanted to shine a light on mortgage stress so you know how to react appropriately given the situation. Just a disclaimer, these videos are not personal advice. These are general information videos and should not be taken as advice for your personal situation. With that out of the way, let's get into it. Mortgage stress is when your mindset tilts from the fun stuff to the important stuff, such as, should I be buying this coffee, or will it affect my ability to pay my mortgage? For a long time, there has been a comfortable balance between lifestyle and financial. When mortgage stress starts to happen, I wouldn't consider it a bad thing. It's your mind's natural way of getting you more aware of your spending habits. When this stress starts to happen, it makes you take a closer look and start to prepare. But it's also a bad thing because cost of living is getting higher. It means life will be more uncomfortable for a period. So how should you prepare for increasing rates to make mortgage stress less of an issue? Interest rates going up and down is normal. It hasn't been like that for a long time, but it is normal for rates to go up, and people have handled them in the past. We need to focus on keeping a roof over our head until interest rates are more stable. At these times, it's a normal thing for us to be questioning and worrying if this extra purchase will affect our ability to pay a mortgage. There's a good level of worrying and there's a bad level of worrying. You should worry at a level that brings yourself, that motivates you to make sure you're prepared. If it's something that's keeping you up at night, then it's important to get the help you need, to get back to a place where you're more comfortable and in control. It can put you in a heightened emotional state, and when it gets to this stage, you're more likely to make bad financial decisions. Quick money is easy to find. You've got payday loans, you've got credit cards, very easy to get. My bank almost every month emails me saying I'm conditionally approved for a personal loan. Money is easy to find, but these sorts of things are an easy way to get into trouble. It's not a good idea to find band-aid solutions. So, how do we get around it? You have to sit down and do a budget. How much is coming in? How much is going out? What's left? If there is anything else we can do to make some changes. I'll say it again because it's what I keep seeing. Look at your lifestyle spending. Do some comparisons on your insurance. Can you get a better mortgage rate? I can't tell you how many times I've done a budget during the last 10 years. And if I ask someone how much they're spending on groceries, they'll say 200, 300, 400, whatever it is. We then go away and do the proper report using the actual transactions. It comes back as 500. People can bring emotion into doing their own accounts. A third set of eyes is really important in preparing yourself for mortgage stress. I'm not going to lie about your numbers. A financial planner won't lie about your numbers. Mortgage stress isn't something that will just happen to you. You should notice it coming from all the media coverage and your own internal compass. You don't want to think about how do we survive the next week, the next month. You've got to make sure you're not doing anything detrimental financially to affect the next 2, 3, even 5 years. You may feel the need to go and get a credit card, but then you max it out. Later, you get a personal loan for a new car. And then in 3 years' time, you're thinking about upgrading your house, renovating. And now all of a sudden you've got all of this other stuff that's built up and adding to the stress. It's sort of shooting yourself in the foot to get through what will be a tough time in your life, but only a temporary time. Ideally, you've been preparing and building your savings to offset any increases. If you've been putting away $200 a week, and then all of a sudden your mortgage goes up by 50 bucks. Cool, you don't have to increase your repayments. Start drawing down on your savings a little bit. So in terms of if you'll see mortgage stress coming, there will be at least a little time because increasing rates aren't implemented straight away. When people borrowed to purchase their houses, they were assessed at probably somewhere near 3% above what the actual interest rate is. What this means is, in simple terms, is that the banks are obligated to make sure you can pay your loan, even in an increasing interest rate environment. You should feel comfortable that you've got a buffer, whether that's in your cash flow or your account. And if you sit down, look at the numbers and say, cool, we'll be okay for the next 1, 3, 6, 12 months time. But that's easier said than done. So if you're still struggling after trying yourself, please speak to a trusted professional. And so now you understand about mortgage stress, you might be thinking if your broker or your financial planner can help, then I recommend checking this video out so you can make sure your broker is up to the task.